Hi, everyone. Thank you so much for joining us today. My name is Mohammed Raouf. I work at the Global Strategic Communications Council, GSSE, and I have the pleasure of presenting today's webinar, which is titled What or Who is Driving Up Food Prices? Reporting on Food Prices in the Time of Polycrisis. Today's 90-minute webinar will begin with 3 presentations from our expert panel, which will last for around 60 minutes. Afterwards, we will have 20 minutes for questions. Please submit your questions in the Q&A section. This webinar is being recorded and will be shared with all the participants afterwards. Today, we have an excellent panel of speakers. We will start with Thin-Lee Nguyen, who is an award-winning journalist specializing in food and climate issues, and she's also the creator of the great Thin Ink newsletter. We also have Margot Gibbs, who's an investigative journalist specializing in money trails and food systems reporting. Both Thin and Margot are part of the Food Systems Newsroom at Lighthouse Reports, which is a collaborative newsroom that focuses on long-term investigations on topics of public interest. We're also very honored to have Jennifer Clapp on our panel today. Jennifer is a professor and Canada Research Chair in Global Food Security and Sustainability at the University of Waterloo. She's a distinguished member of the International Panel of Experts on Sustainable Food Systems, IPES-Food, and also serves on the Scientific Advisory Committee of the UN Food Systems Coordination Hub. Jennifer has also recently published her insightful book, Titans of Industrial Agriculture. I hope that you all enjoy and benefit from today's practical webinar. Please put your questions in the Q&A section. And without further ado, I will just hand it over directly to Thin. Thank you so much.
Great. Thank you so much, Raouf, for the introduction. And hi, everybody. Thank you so much for joining us on this webinar. Like Raouf said, I'm a journalist specializing in food systems issues and work very closely with Margot. And I also regularly bother Jennifer for her expertise and insights. So I'm very, very pleased to be, in this webinar with them. Let me just make sure that I can share my screen with you. Right. Can you see the screen? Okay, perfect. So, there's a reason why I've titled my presentation, Climate and Food Systems, Unhappy Marriage. And I'm going to spend the next 10 minutes talking about this relationship. And to explain a little bit, we have to go back about 8 years. So I was a journalist for a very long time for the nonprofit arm of the Reuters news agency, and I've been covering food and climate issues for about a decade or so. But a lot of it used to be looking at it from a post-disaster, post-conflict situation, right? Hunger and malnutrition and problems with food prices and being unable to afford food after a disaster or conflict or economic crisis. And then I was posted to Italy 8 years ago to cover food issues globally. To those who don't know, Rome is where 3 big UN agencies on food are based. That's why I was posted there. And I learned pretty quickly, I realized that if we're going to be covering food issues globally, and if we were to continue it in the way as a humanitarian issue, it's seen as a poor country's problem, and people are not as interested. But if you sort of link food and climate change together, then suddenly it becomes everybody's problem, because every country in the world is affected by climate change, right? To different degrees, but it is affected. And that was helped because within a few weeks of me moving here, I interviewed a scientist called Andy Jarvis, who at that time was working for SEACT. And he gave me this great analogy talking about climate and agriculture as being in an unhappy marriage. And they said that's because they're absolutely intertwined and completely connected to each other, but they're also deeply antagonistic. Because we know that any little change in temperature or precipitation, let alone climate extremes, has massive impact on what we can produce and how much we can produce, but then the way we are farming also exacerbate global warming. And then a couple of years ago, I spoke to another expert sorry, something happened with my, can you still see?
Yes, we do.
Okay. I spoke to another expert who essentially, expanded the discussion from unhappy marriage between climate and agriculture to sort of say that it's an unhappy marriage, but an unhappy marriage with an addiction problem. And she expanded it to include food systems. And when I asked her to elaborate, she essentially said this is because the way our food systems are currently functioning are very much underpinned by fossil fuels, depending on how we grow, what we produce, and how we produce them. So we know this, but what about climate impacts on food production? This is just, a few headlines from this week, just over the past week that I've selected. And it's happening everywhere, all over the world, as you can see, in the UK, in China, in Canada. And also this is from the FAO latest analysis that shows that by 2100, half of the best land for growing crops like wheat, coffee, beans, and cassava will disappear as a result of climate problems. So we're already seeing climate change impacts on food production. What about, the impact of food on climate as well? We talked about the fact that climate emissions, farming emissions. So these graphs from our world in data essentially shows that both the greenhouse gas emissions from food systems in general, as well as specifically from agriculture, they've been on an upward trajectory now for many, many years. And if you just, in a very, very general sense, break them down into, let's say, what happens on the farm, and then what happens after food leaves the farm. If you look at on-farm and farm gate emissions, there are like pretty much lots of different aspects of our farming is linked to emissions and the use of fossil fuels. You use equipment and transport, that's carbon dioxide. Do you raise livestock? Do you grow rice? And then the way you treat the waste from livestock, that's methane, right? The nitrogen fertilizer, animal waste, that's N2O. And even though methane and nitrous oxide are much shorter lived than carbon dioxide, we also know that they are way more potent than carbon dioxide. So all of that has massive impact on climate change. Now, once it leaves the farm, once the food leaves the farm, then we also need to think about emissions associated with trade and processing, and that includes air miles or shipping from the transport, cold chain. We forget a lot about cold chain, but there's so much cold storage in our food these days, right? To keep food fresh, to keep them longer, and there's so much fossil fuel use associated with it. And if you go beyond that, once it reaches us, consumers, there's also emissions associated with it. And of course, any type of consumption, there's emissions, but there are some emissions that we've been trying to see how we can term it, like a bit more wasteful than others, maybe. I'm still struggling with it, but essentially, for example, food waste, right? Food loss and waste, according to experts, account for about 8 to 10% of global greenhouse gas emissions. And according to the UNFCCC, food loss and waste emissions are 5 times more than emissions from aviation. I mean, the coverage around climate change has been so great over the past few years. There's so much, journalistic interest, but I feel like food systems, understanding food systems is still lagging behind. And I would really like people who are interested in environment and climate to look at food systems in a similar vein as well and link those two together. And of course, if your diet is very much heavy on meat, specifically livestock, red meat, then there are also a lot of emissions associated with it. Now, even beyond emissions, our food systems have a massive detrimental impact on biodiversity loss and deforestation, fresh water use, and also contributes to pollution of air, water, and soil, right? If you look at this graph from our world in data, it shows how much agriculture and land use, so just agriculture and land use, doesn't include supply chains, doesn't include retail consumption, waste, how much agriculture and land use has contributed to the rise in mean surface temperatures. That's a lot. If you look like, oh, it's less than 0.6 degrees Celsius, but what it means to people, living and livelihoods, that's a lot in terms of contribution. And again, that is just from agriculture and land use. It doesn't include food systems. And the latest data is that food systems account for 1/3 of total man-made greenhouse gas emissions. So any climate target that does not include food systems is bound to fail. And according also to the latest document from FAO, the SOFA report, food systems also account for 12 trillion in hidden social, economic, and environmental costs a year. So, I guess this is one way for me to say we would really like more and more people to be investigating food and food systems and their linkages to climate change. Now, how does that all link to food prices, right? We're back to the unhappy marriage, right? Because we've got agriculture, food systems, land use change, all of that contribute to the rise in temperature, changes in climate, and of course, changes in climate then affect what we can grow and how much we can grow, right? And that affects prices, because if we can produce fewer food, that means more, more expensive, things become more expensive. Again, these are recent news headlines about how climate change is already having an impact on food prices, increasing prices of oil, rice, and how it's making food expensive everywhere, and how, futures for wheat are getting really, really high. Margot will go into some of this later in terms of what is causing it. So obviously, climate change and agriculture, they drive each other in a way that can be negative to us. But that is not the only reason for food price rises. And I want to use the case of Kenya here. Now, the headlines that you see, the 3 headlines, they are from between 2021 and 2023. And they're talking about how the prices of egg in Kenya are increasing. And I think most of us will be quite familiar with this, and because all of us, I think, have seen prices of food increase and double in the aftermath of COVID-19, climate change, and the war in Ukraine. So what is happening in Kenya? So between September 2021 and January 2023, turns out that Kenyans were paying 36% to 85% more than their neighbors in Uganda for a tray of 30 eggs. But why is that happening? Is it climate change, or is it COVID? Is it war in Ukraine? What is it? So the Competition Authority in Kenya did an investigation, and then the Shamba Center for Food and Climate also did a brief summary analysis for them. And it found out that essentially in Kenya, there are 4 suppliers that control over half of the market for commercial feed, which means they can set the prices of how much they sell the feed for. So that means Kenyan poultry and dairy farmers were paying up to 40% more for animal feed compared to their neighbors. And then if you look one more step further down, for the subsector on ingredients to produce the feed, again, there were 4 firms that were vertically integrated that dominate this market. So if you are a big firm with vertically integrated operations, you can get the feed ingredients cheaper. But if you are a small producer, you end up having to pay more. So some of them just left the market because they couldn't absorb the losses. The ultimate result was that farmers had fewer choices as to where they buy their feed from, that reduced their income. And it also means for consumers, they have to pay more for their eggs. So this graph from the Shamba Center report shows that compared to not just neighbors, but international benchmarks with South Africa and Brazil, Kenya was paying way more for their poultry feed. So Margot, after following me, we'll be talking about some of these aspects of the profiteering. And then Jennifer will then give you a much bigger view of, what are the other causes that has an impact on food prices. So I guess my main thing that I want to say is that, climate change, will have an impact on food prices, are already having an impact, will continue to have an impact, and will play a really important role. But that is not the only factor. And the two speakers after me will sort of explain in detail why. For the next 3 slides, I just want to very quickly run through you. Don't worry about taking them down, because we will put them into PDF and then share them with you afterwards, so that you will have access to this, and you can, you know, click on these, and I've made sure that the URLs are correct. So these are sources for food prices in terms of global, regional, national sources that might help you understand food prices better. And there's also a general list of resources if you want to understand more in terms of food systems and where to find information. And I didn't put this in here because she's going to be speaking later anyway, but Jennifer's book is definitely worth reading. It's big. I think it's 400 pages. But if you are interested in industrial agriculture and where it comes from, that's a great place to start. I'm now going to pass it over to Margot for the presentation. Margot?
Hey, thanks so much, then. Oh, that's fascinating and a great introduction. I'm just going to check that I'm sharing the correct screen. Is that good? Do you see my do you see a opening to the presentation? Fantastic.
Yes.
And you hear me okay? Fab. So thank you, Finn, and thank you for hosting this webinar. I think it's a really interesting subject and a really important subject for people to start to report more on. So I'm Margot Gibbs. I'm an investigative reporter at Lighthouse Reports. I work in the food systems newsroom, and I come from a money trails background. This is what we're going to be I'm going to be running through today. Understanding how corporations have used shocks as a way to increase food prices, and then looking in a deeper dive down into how that applies to finance. So looking at the speculation on the futures market and how that can drive food prices, and then corporate profiteering, how to look at corporates to see if they are, to unpick their narratives and identify where there may be profiteering. So the first kind of question, why are we looking at hunger profiteers? Why would we look to see who is making money out of food prices? The primary reason is this, because while Finn's given us a fantastic array of headlines from the last week, which show how climate is like food shortages, i.e. supply and demand, are given as very clear narratives over why we see food price increases. And this is what we see on a day-to-day basis. And the reason to look at that critically is because to assume that the prices that are dictated by such price movements are the correct prices, and that they are inevitably going to follow supply and demand is an assumption that our markets are perfectly efficient, and assuming that is basically akin to religious belief. To have that faith is akin to religious belief. And whilst many of us might easily accept that in theory, in practice, we all cling to the simplest narrative. And this has got a very powerful effect in the world. And the example I'm going to give you is this classic one with Ukraine, Russia's invasion of Ukraine. So when Russia invaded Ukraine, everyone suddenly was staring at the wheat market and panicking and saying, oh my God, they are the biggest wheat producer in the world. And prices went up 50% in a couple of weeks. That narrative around shortage and scarcity leading to price increases hid this fact, that in fact, the expected shortfall from the Ukraine war was 0.9% of total global production. The thing you saw in the press was that it was 20% of exports, but those exports represent a very small level total value of total production. So this is the reason to interrogate. And so the first question to ask when you're looking at food prices is that food price warranted by the market fundamentals, by those supply and demand mechanisms? And if not, if it doesn't look like that's warranted, who's taking advantage and how? How is this price formed? So that's what I'm going to be looking into. And just quickly here on why this matters, like why we would be interested in finding what this is. There are, of course, like a plethora of reasons. Riots and food prices. This is fundamentally also about justice. If food prices are driven high for someone else's profit, that is the poorest people in the world who spend the biggest proportion of their incomes on food who are suffering the most. That leads to insecurity and riots and inevitably conflict. So it's incredibly important from a straight justice point of view. Then you might look at the political reality in Europe and the United States. This is the former agricultural commissioner talking about dropping critical environmental protections that were going to be implemented in European agriculture on the basis that that food prices were too high. So, and then the middle picture there is about the fact that cost of living is by far the most important matter to voters, and in which people trust the Trump Republican Party. So this is why we might care about correctly diagnosing the cause of food price increases. So looking back to that Ukraine example, after the invasion of Ukraine, we asked the question, if that price shock wasn't warranted by the market fundamentals, then what mechanisms were increasing wheat prices? And we look back to the last food price crisis in 2008, where the strong candidate was for the food price crisis was money flowing into the futures markets, speculators who were pushing the price of futures out of keeping with market fundamentals. Now, futures markets are supposed to be a forum which allow those who deal in primary purchasing, so primary production, so your millers, your airlines, your food processors, to manage their price risk. And the very simplified version of how this works is like this. A farmer can lock in a contract with a miller to sell their wheat. The miller agrees to buy at a given price. The miller then insures against a collapse in the futures price by selling a contract on the futures market. That agreement to sell is called a short contract. Now, early on, and it's bought by someone. Now, early on in the invasion, the price of the near-term contracts increased to such a degree that there was market dysfunction. So the prices of those contracts had got so high that the shorters were having to increase against their losses to such an extent that they were having trouble buying actual wheat. So that was our starting point. There's something going wrong here. And what's going wrong and who's driving it. So where we looked early on, we looked around to see what we could find. Early on, we found that there was a huge amount of consumer money going into publicly traded funds that were buying futures. So this is a map of the price of Chicago wheat per bushel and the cumulative money into two publicly traded funds that bought food futures. And what we found was that in the first couple of months to April in 2022 was that $1.2 billion had flown into those two funds, and that was used to buy futures contracts, compared to just 197 million flowing into those funds for the whole of the previous year. So there was a huge amount of money flowing. And it was correlating very closely with this push in price. Now, the next question is, how do we establish what's referred to as excessive speculation? Now, there's a lot of debate about the definition and what counts as excessive speculation, but the rule of thumb that I found most useful investigating this was from Michael Masters, who was a hedge fund who had led the charge against speculation in the 2008 financial crisis, or food price crisis. And he said what to look for. He said what to look for is when speculation becomes most of open interest. So this is most of the contracts in a commodity versus hedges. That means the price formation is coming from them. So the speculators are dictating price. And that was the kind of fingerprint that we looked for in the data that we got from the regulators. And everyone can get this data. So this comes from, well, the data that I'm showing you here is the Paris wheat market. So this comes actually from directly from that trading forum. And it shows that the total speculative share of the contracts at the beginning of 2022 came to their highest ever, 72% of the of open interest was speculative, was speculative trading. So they were, in Michael Masters' terminology, they were creating the price formation. So they didn't have an interest in the primary production, and they were creating the price. So that was the highest on record for the Paris wheat contract. And then in Chicago, we found 8-year highs for speculators, for the hedge funds and index funds, as a total of the soft red winter wheat, which is the most traded US contract, and also the thing that makes bread. So we spoke to people about this. We spoke to experts about this, who told us that the data that we were looking at was the kind of fingerprint of excessive speculation. Journalistically, there was a little bit of a problem here, in that, like, there's a delay between when you can talk about who this actually is. So the consumers who I talked about here, they're a tiny part of the problem. What we're really interested in is the big players. And here we've got 2 examples of who benefited. There were the investment banks. So £4 billion increase in trading revenues in the commodities section of top investment banks. And then we actually mimicked an algorithmic trade on algorithmic traders on food futures, to show that the top 10 hedge funders that do that kind of trading made £1.5 billion in profit in the couple of months around the Ukraine war. So there were huge flows of money going to private actors. This just represents a huge transfer of wealth. Now, the next thing I'm going to go on to is the kind of longer term impact of these shocks and the companies, entities, whatever you want to call it, who exploit these shocks. So the speculation in this case was something that was quite short-lived. It was around 4 months, and it was a huge amount of money that people made in that time, but long-term impacts are longer. Now, what I'm going to go into here is seller's inflation. So this is kind of corporate profiteering. Now, seller's inflation is when inflation generally, sorry, this actually slightly misstates it. Inflation is being driven by profiteering by companies. And the challenge here for us to interrogate is what the kind of industry narrative is, which is that companies are raising prices to keep up with inflation. Or are they, in fact, taking advantage of the crisis to push prices further to make increased profits? Now, this is the kind of poster child of seller's inflation. It's PepsiCo. So Isabella Weber, economist at MIT, and her colleague Wasner published a very influential report on this, which essentially showed that there was this strong tendency for price over volume. So going back to the kind of traditional economics of like how you make an increased profit, you're supposed to do it sorry, this is a classic headline from the Daily Mail about how Doritos and PepsiCo were somehow a victim of shrinkflation. Now, what the Weber paper shows is that especially in consolidated industries, and this is going to be a theme that we come back to, in consolidated industries, companies competing against each other in a shock don't engage in a price war. They instead tacitly agree to increase their prices together. They don't have to compete with each other. So there isn't this what's supposed to happen naturally, where if someone increases their price too much, their trading volumes will go down, because that doesn't work if your competitor is also doing it. And that it's something that in consolidated industries you're very able to do. So this is a graph here showing that what was driving PepsiCo's increased profit margins contributions to revenue was largely price. And this is information that you can get from their annual reports. So they PepsiCo breaks down these figures, breaks down their revenue figures to show where their income comes from. Is it from increased volumes, or is it from effective net pricing? And you see in 2022, the impact of effective net pricing is hugely much more than is where all the growth is coming from. And this is a quote from, I think, PepsiCo's CFO saying, "I think we're capable of taking whatever pricing we need." Now, we're now going to look at how to directly interrogate the idea of passing on costs. And I'm going to do this in a very basic way to begin with. I'm going to show you what this looks like on a profit and loss account. So if you were to start a very basic business, say selling burgers, what would your profit and cost? This is your pre-shock profit and loss. You've got a burger which you're marketing at $5, cost of sales is $4, and your gross profit is going to be $1. That gives you a profit margin of 20%, and you are looking at it from the other way around. You know, you're going to spend £5 on sale, $4 on sales. You're going to give that a markup of 25% to get to your sales price. Now, what happens if you are simply passing on cost? Look, your cost of sales increases to $5. So if you want to maintain the same gross profit, you increase your burger to $6. That gives you a gross margin of 17% and a markup of 20%. So even if you're merely passing on cost, you actually have a depleted profit margin and a depleted markup. In maintaining margin, in order to actually maintain your profit margin, you have to increase your sales price more than the amount that your cost price increase. You have to increase your burger by $1.25 to $6.25. So there's this amplification of prices that even if you're just trying to maintain a profit margin, you have to amplify your price increase. Now, the reason we're looking at this is because when companies say that they are just passing on costs, this gives us quite a neat way just to interrogate that claim. So, and we can do that in an easy way of us understanding that's not in terms of profit margin, is looking at the markup. So how much relative to your costs you are increasing the cost of your revenues, your prices. All you need is a profit and loss statement. That's the definition of profit margin. This is the markups. This is how much profit for every unit of spending by the company. That's how you calculate it. And we're going to go through a real example here. This is a press statement from the White House in December 2021. It says recent data show dominant meat processing companies are taking advantage of market power to raise prices and grow profit margins. We are going to look at the kinds of information we'd need to be able to show the same kind of thing. And we're doing this through the example of Tyson Foods, which is one of the companies which dominates the American meat processing market. And we're going to show that we're going to use this to show that prices are not merely keeping up with inflation. They're in fact growing their profit margin, which is absolutely out of keeping with the idea that they're keeping up with increased cost of goods sold. So looking here, we can see that what you've done from 19 to 20, so this is COVID, you've increased your markup by 14%, and that's given an increase in gross profit, of 362. These are millions of dollars, so millions of dollars. And then in 21, they've pushed that even further, so 16.1%. That gives you a gross profit increase of 1.14 billion. So this is how incorrect the suggestion is that they are merely covering costs. And this is the simple way that you can interrogate that. You just look at the profit and loss statement. If they're increasing their margins, they're increasing their markups, that at least very much narrows what they can say in response to we're just covering cost of goods sold, because the only way they could then do it is say, oh, well, we are selling a lot more high margin goods. That's the kind of available route for them then. And some of them try it, like this is what the groceries have been saying. And then I wanted to give you this. If you are reporting on companies which are public, the Weber paper that I talked about before drew heavily on quarterly earnings calls, and they are a goldmine if you want to understand how the reasons that corporations are really behaving as they are, because they are talking to investors here. And this is the CFO, Stuart Glendenning of Tyson. He's saying our pricing actions and strength in the beef segment led to approximately 5.6 billion of sales price mix benefit, which more than offset the higher cost of goods sold. And this is the kind of fingerprint that you're looking for when you're looking at corporate profiteering. I'm going to briefly mention at the end, and I think Jennifer will come more to this, like how come this happens? Why don't we live in a market where someone puts up a price which is too far out of keeping they're supposed to have a declining sales declining volume, right? But again, where there are monopolies, where there are near monopolies in particular markets, that no longer works because they can price in coordination with each other. So consumers or people or businesses who deal with them are left having to accept those prices. And this is, I recommend a series that Somo did in December 24, which looks into, which is titled Beyond Prices. And this is one of the graphs from that report, which is showing relative markup as a proportion of sales. And it shows that the biggest companies, you see the steepness of the line here. It shows that the biggest companies were making the highest markups, which is this suggestion or confirmation, however, that those companies that have market power are able to hike prices the most. And there, I'll leave it to Jennifer to take on next time. Thanks.
Should I just jump right in? Okay, I'm going to share my screen. Yeah, and I'm just going to say first, apologies in advance. I have a naughty kitty cat outside, and there's a fox in the neighborhood, so I've left my window open in case something bad happens. So anyway, I hope you can see my screen. Is that okay?
Yes.
Excellent. Yeah, so I'm going to be zooming out a bit more because, well, I'm a professor and I'm not a journalist. I'm sure Thin and Margot, who I do speak with on a regular basis, I'm sure they would think that my sentences are too long. So But hopefully this bigger picture will help. And I wanted to give this bigger picture of what's driving food prices. Some of it will echo what Thin and Margot have just said. But I think it's important to recognize the big picture, because oftentimes, and that simple narrative of supply demand that Margot was talking about, it often leads to narratives that we see coming out of like officials who want you to understand a particular crisis in a certain way, and that often gets repeated in media stories, etc. So it's important to be aware that it's actually a really complicated picture when we're talking about food prices. It's actually difficult to pinpoint and pull out what is the one factor that's leading to change. And so it's important to think about the interactions as well, because I'll just say sometimes one thing can be driving what's going on, or it can be the leading force, but other things are also happening at the same time. So food pricing, what is driving it? There are many, as I said, many forces, and that it's not just this production availability. And that's a really common explanation that we hear, is that if there's a decline in production for any reason, including climate change that Finn talked about, that it's necessarily going to lead to a price spike. And really, it depends on the amount of food that's in storage at any given time. And oftentimes there's reporting on, how many days worth of wheat are in storage, for example. That affects what traders are doing, what Margot talked about, and that can affect, in turn affect prices. But there's been a lot of scholarship about this question, because that's, I would say, a long time that narrative's been really powerful, that production declines immediately lead to food prices. But we've actually seen food prices go up and people's ability to access food go down, even in times of abundance. So we have to take apart that narrative a bit more and understand what's going on. It's not just this simple supply and demand story that, if you've taken an economics course in university, you learn prices are set by supply and demand. That's where, the two curves meet, and that's where the prices are set. But we have to understand there's no such thing as a free market. All markets are mediated in some way or other by rules, by institutions, by norms and practices, by politics. And so we have to recognize that sometimes markets can be distorted, and Margot talked about that a little bit, but also sometimes like politics really plays a role. And so basically, it's important to recognize there's a suite of complex factors that overlap and intersect with each other. And so I'm going to present my fun visual I spent way too much time working on, but I want to emphasize, even though I'm using words smart art or PowerPoints, that these factors all interact with one another and overlap with each other. So when we talk about food prices, and I'm going to go through these in a little bit more detail, there's that question of scarcity that was brought up by both Finn and Margot. And there's different factors that can explain scarcity. That's one factor. And then speculation. Margot talked about that. Profiteering, she also talked about that. There's also macroeconomic dynamics that I think are really important for us to understand about what's going on in the economy more generally at a time when we see food crises. There's also adjacent prices. This came in a little bit because, when we talk about the price of oil or inputs or transport, et cetera, that matters for food prices. And then geopolitics. And we're living this right now with these trade wars and different disruptions to international trade patterns. But again, just to emphasize, I say it's not just supply and demand. Of course, supply and demand matter, but they're mediated through these different factors. And that is not such a simple equation. It's really, really complicated. And so I think, as reporters, it's important for you to consider when we're in a price crisis, prices are being bid up. It's important to really investigate what of these different factors are perhaps the most important and how do they interact with the others. So I'm going to talk a little bit about each of these 6 dimensions of this kind of food prices. And I'm sure I'm probably missing some, because every time there's a new crisis, we recognize, oh yeah, that really mattered. So anyway, I'll just talk a little bit about these. And because Thin talked about climate change, I won't spend a huge amount of time here, but we know that one reason scarcity can happen is because of climate change and natural disasters. Of course, all parts of the world are at risk, but we do know that Africa, Sub-Saharan Africa and South Asia are perhaps the most affected in terms of expected declines in yields. So this is a graphic from the UN Environment Program. I pulled it out of an academic article. I put the link here, but basically it shows that those parts of the world that we consider typically, you know, the global south and a little bit of, you know, in the global north, but mostly the global south that's being impacted by yield declines because of climate change. This doesn't necessarily automatically mean that we're going to see food prices spike. It's complicated. It depends on where that scarcity happens. And it's important to recognize that in many developing countries, up to 70% of food is actually sourced locally. So if there is a local disaster, this can affect food prices in that particular local context, especially if they're relying on local supply. But we can also see climate change affecting global markets in the way that if climate impacts are hitting some of the biggest producers of staple grains like wheat, maize, soy, this can actually lead to an increase in prices on global markets. And those price increases can basically be transmitted to developing countries. And that transmission depends on a lot of different factors, including what percentage of the food is purchased from local suppliers versus the global market, how dependent on imports is that country. We know in sub-Saharan Africa, for example, many African countries are food import dependent. And so when there is a price increase on the global markets, that can actually filter through. So drought in Canada or the US can actually have an impact on African countries in terms of bread prices, for example. But what's important is to sort of dig down and understand the context you're talking about to see where most food is coming from. Is a country dependent on imports, and you know, the climate impacts. And just to give some recent examples about how important this is, I mean, right at the time after Russia invaded Ukraine in early 2022, when speculation was happening, at the same time, like just a month or so later, India had a major heat event, and that led to a 15% loss of their wheat yields and almost a 5% decline in production. That, because India is basically feeding itself, it does export to some extent, but also feeding its own population, that decline, you know, could have a direct impact on prices. So digging down and understanding these kinds of specific dynamics with respect to climate change and the context you're talking about is really, really important. So again, just a message about nuance and not to just conclude that, you know, climate is leading to scarcity, is leading to higher prices. It's more complicated than that. A second aspect of scarcity I think we need to talk about is really conflict. We know that areas affected by violence and conflict are much more likely to experience food insecurity. This graphic shows that the little dots are areas where there's armed conflict in the world, and the redder the country is shaded, the more alarming their food insecurity situation is. And this is over the decade of 2010 to 2020, sort of mapping all of those conflicts. And there is an overlap for sure between conflict and hunger. And we have to keep that in mind, because these are the areas, when you look at the hunger hotspots report, for example, from the FAO and the World Food Program, that shows hunger hotspots are almost always those that are experiencing conflict. And the reason this is important is because conflict disrupts production, it disrupts supply chains, it disrupts trade and travel, you know, people's ability to access food, simply because out of fear of violence, you could have blockades, for example. And we've seen that, just to give the example, in Gaza, where we know there's been a blockade. It was lifted briefly when there was a brief ceasefire and then reimposed. And this visual, which comes from a Time magazine report, shows the difference in grocery prices in Gaza between, you know, before and after the blockade was put in place. And you can see it's quite dramatic in terms of purchase of a sack of flour, fish, eggs, etc. Really soaring prices. And that's not surprising in most areas experiencing conflict. Also another issue with scarcity, and I wanted to bring this up because it was really discussed a lot in the 2008 food price crisis, was increased diversion of crops for other uses. So it's important to recognize that around 50% of the grain crops that are grown globally are actually not feeding people directly. They're often going to industrial uses like biofuel or animal feed. And that's a critique that many have put forward, is that when we hear these narratives of scarcity, it's, we're producing so many, way more calories per person than is needed to get a sufficient diet. But a lot of it is being diverted to other uses. And this is just showing in the US, for example, after around the year 2000, there was a huge run up in the amount of corn diverted for biofuel production. And that was a result of biofuel mandates that the US government had put in. And it was this assumption that, oh, the US is overproducing maize, it will be quite easy to shift it to address climate change. We'll have low emission fuel by adding ethanol. But it actually took a lot of maize out of the food and feed markets. And that had a material impact on food prices, along with other factors like speculation, which I'll talk about in a minute. So it's important to recognize these kind of diversion can really matter in terms of scarcity and availability of food. Also, there are diseases, obviously, that can affect supply chains. And that, the recent example of that is the case of bird flu and eggs in the US, where prices were bid up quite dramatically. Egg prices went from around $3 a dozen to some cases $14 a dozen. That's because so many chickens had to be euthanized, and that was because of disease. So these, different factors, and there could be, any number of things that we haven't, that I haven't mentioned today that could affect food supply like this. So that's one important element that we need to be aware of. And then Margot also talked about speculation, and it's important to recognize if you're reporting on speculation and you're talking to different people, you might want to speak to some economists that work in this area, but it's important to recognize there's a huge debate about the extent to which speculation does affect final food prices. So be aware of who you're talking to and what their ideological orientation is, let's say. Because you often hear these markets are absolutely necessary for price discovery. They're important for hedging, for these kind of what we call commercial actors. Those are farmers or say food processing companies. They have an interest in the actual physical grain. So that those markets are important for them for price discovery, for access, and et cetera. But at the same time, we've seen financial investors creeping into these markets. And as Margot was talking about, when they take over, this can have a huge impact on these markets. And it affects those people who really need to hedge to do their business, like as farmers or whatever. But this graphic shows, it's from a Valoral report. I put the link here, but it's a company that does, reports on financial investment in agriculture. And you can see from around 2005 up to 2023, a massive increase in financial investment interest in the agri-food sector. Some of this is in land, some of it's in commodities, which is what Margaret was talking about. Some of it's in, these kind of land index funds, et cetera. And that coincided both with the deregulation of these markets and the rise of new kinds of financial investment products, which we consider, there's commodity futures, which Margaret was talking about, but there are these things called commodity index funds that bundle different commodities into an index, sometimes food along with non-food commodities. There are what we call exchange traded funds that can bundle commodity future prices, farmland index funds. There's tons of ways in which investors now can dabble in the agri-food sector. And as they have increased their financial interest in the sector, it's led to some distortions. And that can definitely lead to price increases, especially we're seeing land prices increase, we're seeing food prices increase often when there's an uptick, as Margot showed. And I'm going to repeat her diagram in the next slide. So when we see these rapid rises in financial investment, which we saw with the wheat, that's an index fund on wheat, and that happened after the Russian invasion of Ukraine, investors piled in like crazy. There was this huge increase. And as Margot said, they sat on that for about 4 months. Then when the Black Sea grain deal was announced, they started to come out and they made a huge profit, mostly hedge funds that were taking those positions. And also that happened in the 2008 food price crisis. It was very, very clear, as Michael Masters said, and I mean, he was talking about that period, that's when these financial investors started taking over these markets. And that definitely has been one of the factors that can pull food prices up, because these global markets that are setting prices for grain futures do filter through to final food prices. Of course, there's huge debates about all of this, so just be aware of that when you're talking to different people. You're going to hear different stories. But it's important to go to some of these key reports and the work that Margot and Thin have done on this to say, I know this is something we can trace it. Profiteering, Margot talked about this as well, but it's typically happens when there's market power. And she mentioned market power. That's usually when there's a market that's dominated by just a few players. Typically, economists would say a market where over 40% of the market is held by just 4 players is prone to these kind of distortions in market power, especially when it's over 60%. And I don't know how well you can see the graphic here. This is from my colleague from IPES-Food, Phil Howard, but he showed in the US market these high degrees of concentration. So in the meat area, in cereal, in soft drinks, these kind of markets, we see extreme concentration. And when that happens, there can be this tacit collusion, as Margot showed. So I'm not going to spend a lot of time on the profiteering, but that definitely can happen in the food system. And as she said, going to annual reports of these firms, that's usually where they sometimes try to hide the numbers in creative ways with accounting, but their words actually speak volumes about their ability to set prices, because they know that's what their investors want to hear. And as Margot said, it's also those profit or those markups and margins, there are profit margins that matter. So you can easily show, as she did, that overall profits can rise when food prices rise, even if they're just passing on costs and their margins decline. But when their margins are actually rising, that means they're raising prices by far more than their costs. And that is a textbook definition of market power. We've seen that. This is the food retail sector in Canada since COVID. Massive. I mean, it doesn't look massive because in retail margins are typically low. They're typically 1 to 2%, but they increased from around 1.5% up to nearly 3.5%. And that's really material. It's quite significant, and it matters for food prices. Okay, on to some of the other factors, macroeconomic dynamics. This really matters, and I think because it's complicated and sometimes hard to understand, it doesn't get the attention that it needs. But if you consider a country that's dependent on food imports for, say, 50% of their calories, and the value of their currency declines, basically it's going to cost them more to buy grain on global markets. So that can push up prices when a currency value drops. But the US dollar currency value also matters. It matters for the US, but it matters for everybody else too, because these globally traded food commodities are denominated typically in US dollars. So if the dollar value falls, other countries that are exporting are like, wait a minute, now we're not getting as much money as we used to get before, so we're going to raise our prices. And so that can lead to price increases from other exporters. But complicated things can happen where what we're seeing at this moment in time, the US dollar is actually falling, and this is deliberate on the part of Donald Trump because he wants to increase competitiveness of the US. So he wants to push the dollar value down to basically make it cheaper for companies to set up business in the US. That's part of his policy. But his tariff policy is also leading to a decline in currencies of developing countries that are exporting, say, minerals or other things, because he's put tariffs on them and their markets are harmed. And so we're seeing both developing country and US currencies fall. And this can be a double whammy for developing countries, because although prices denominated in US dollars might be worth less, then other exporters are charging more, and then their currency values are falling against those other exporters, as well as the US dollar. So it can lead to huge dynamics in availability and in price that are, I would say, hard to parse out, but I put a source here that's a story about how this process works. Then I just want to quickly say about other macroeconomic dynamics. We can talk about financial crises we've seen, or, political crises or other kinds of economic crises. They can coincide with food price rises or sometimes declines. And so that's important to be aware of. And then there's these commodity super cycles that happen over these long periods where commodity prices can be bid up and then they crash and then they go up and then they crash. And so when you get a confluence of a commodity super cycle with some of these other factors, like profiteering, this can really exacerbate food price trends and intensify a crisis. So again, it's important to look at these kind of data where, if we're seeing grain prices rising, where are we in this commodity super cycle? What's happening to other commodity prices as well? That's important to look at. Quickly, I want to also talk about adjacent prices. I mean, they're connected in a way to these macroeconomic factors, but we know that oil prices and energy prices are correlated with food price increases. That's because of, energy's used on the farm, energy's used in cold storage, it's used in transportation, it's used in packaging, energy everywhere. And so when energy prices rise, this can have an effect on food prices, but energy prices can rise because of geopolitics, which I'll talk about in a minute. And then food is kind of like along for the ride when oil prices change. And there was a bit of a spike today because there was concern about Iran, and that sort of bid up oil prices. If that stays for a while, it's going to impact food prices. And also other adjacent prices like inputs really matter. This is, again, a bit connected to energy because of energy use in production of fertilizer, for example. But we often hear, oh, prices went up because input costs went up. And input costs went up because energy costs went up because energy is used to make nitrogen fertilizer, as an example. This shows these, huge price spikes that happened around the time that everything else was rising. And we often heard, retailers just saying, well, we're just passing on costs because prices of food went up. And prices can go up for other reasons too, like these commodity super cycles or even the cost of labor. And that was an issue during COVID as well, where there was a scarcity of labor, wages were bid up, and that contributed to food price increases. But again, how these companies, they reveal themselves. So Nutrien, one of the biggest fertilizer companies in the world, actually bragged in its annual reports that their ability to increase prices far outpaced their increased cost. So, even if the math and the numbers are hard to understand, and sometimes, every company reports them a little bit differently, look at their words. They're really revealing. And then finally, geopolitics, where we see tariffs and counter tariffs. This is going on. This is a picture in a Canadian supermarket where they actually now label every food item that is price impacted by tariffs. It's great for Canadians because we have this thing right now where we're not buying anything from the US. But basically these tariffs they're just a direct tax on food. And if a country is importing food that's affected, it's going to make a difference. So, and these can be overlap with supply chain disruptions can happen because of these geopolitical shifts as well. And then finally, I'll just say what's really interesting right now is we're seeing these shifting trade patterns where China is suddenly like, we're not going to buy our soy from the US because, we're annoyed with them. And then, and we're going to put tariffs on their products coming in. And so they're shifting to Brazil. And that actually led to a price premium on Brazilian soybeans. So on global markets, Brazilian soy costs more than US soy simply because it's a politically preferred source of food. So I just wanted to say, oops, I don't know what happened to that slide, but this matters because of, these different dimensions of food security. And I just threw this slide in here while Ben and Margot were talking, but I just wanted to emphasize, this is the FAO definition of food security, is that when all people at all times have physical, social, and economic access to sufficient, safe, and nutritious food that meets their needs, their dietary needs, and food preferences for an active and healthy life. And these different factors that we're talking about that affect food prices, they affect all of these elements of people's ability to feed themselves. So that's really important. The corporate power and profiteering that undermines people's agency, it undermines their access. Climate change is a sustainability issue for sure. So we have to think about all these dimensions when we're considering the impact of food prices. So this is my last slide, Raouf. I'm sorry I'm talking for too long, but you know, like, what are the policy responses? It's not straightforward. Policy responses, if you're going to bring that into stories about food prices, it's important to take the specific situation into account because so many factors are involved. So when we talk about the kinds of policies that matter, it's all over the place. You know, climate policy, if it's climate driven, disease control and food safety, biofuel mandates, financial regulation, competition policy, energy policy, you know, exchange rates and interest rates, they really matter for, you know, investors that are swaying things, trade policy, international relations. It's so many policies affect food prices. So when you hear politicians say, I'm going to bring down food prices on day one, which we heard in the US election cycle, you know, people like me are like, how? You know, short of government controlled prices, which can mediate through all of these things. So anyway, I will stop there. I'm happy to answer questions. And because then mentioned my book, I put a little picture of it there. And if anybody is interested in reviewing it, contact me because I can snap you a free copy of the book. All right. Thank you. I'll stop.
Oh, thank you so much, everyone. Thank you so much, Jennifer. Thank you so much, Margot. Thank you so much, Thin. This was amazing. And thank you so much, everyone, for posting your questions. We already have 5 questions, which I will start addressing them to the panel and answer them live. So the first question is from Anne Jomard, who's saying excellent talk and thank you all. And the question is, why do you think the effect of food systems on climate change and vice versa are still underreported? From a solutions perspective, where do you see the most promising solution to these complex issues? Who wants to answer this one?
I can start very briefly and then others can go in. I mean, so, you know, the food systems climate change, the impact of food systems climate change, I asked the same question 8 years ago, because that was the first time at COP climate negotiations that agriculture sort of became, you know, like started making slight headway. Part of it is because, you know, ministers of agriculture didn't want food issues to become part of climate negotiations, because food is it is, if you think of it in a very broad sense, it is a national security issue, right? If you can't produce enough food. So there's a lot of concerns around, if we discuss food at climate negotiations or at, you know, food's impact on climate change, then there's going to be talk around reducing some of the impact, and that could mean reducing food production. So, you know, that was the thinking, and it's still a big battle. It's like 2 steps forward, you know, 1 step forward, 2 steps back kind of thing. Now you have food days at, you know, climate negotiations. People talk about, we're gonna, you know, coming up with declarations and agreements and methane pledges and this and that. But if you actually, you know, drill down, it's still extremely contentious, extremely sensitive. And you know, for a long time also, you know, agriculture is also seen as commodity, export, money, and not, you know, the looking at the broader pictures of agriculture's impact on climate, it's relatively recent, and it's so easy to get dragged into the cultural wars aspect of this. And I think that's, you know, that's one of the reasons. Very briefly on solutions, I mean, there are lots of ways of adjusting. I mean, I think especially in industrialized nations. I mean, I come from Burma, right? So I come from an agrarian country. So I see it like what is happening in the poor places in terms of agriculture. And there are a lot of problems there as well. But I also see in industrialized nations that I now live and work in, like the monoculture, the over-reliance on chemicals, you know, all of that is it's a massive problem. And in some ways it's complex, but in some ways it's not. Like IPES-Food, and, you know, that Jennifer's a member of, has been really pushing on like agroecological solutions, which means you know, and it's not expensive. There's a lot of talk about how, you know, they're going to cut yields. There's not enough scientific, you know, work, or there's part of it is because there hasn't been any funding to support some of those solutions. So it's this vicious cycle where people turn around and say, there's no evidence, but that's no evidence because there's no funding to find the evidence. there is evidence emerging. And that's definitely one holistic solution, but I'll let others.
Thank you very much, then. Jennifer, do you have any comments or on that
Yeah,
question?
no, I think that's a great question, and it links to Jack's question that's just a little bit further down also about whether climate change is weaponized in justifying food price increases. I think, yeah, exactly. I agree with what Finn just said. I think there is more reporting because of this increased attention at the climate COPs. Also, the IPCC taking on food and agriculture in the last couple of years a bit more. And so I think that is important to raise that kind of attention. And I think there's also, I mean, there's complexity that would explain the lack of attention until recently, and also how you parse out, you know, the kinds of impacts and some of the things I was saying about how complicated it is, and intersecting with other factors. But in terms of what I see happening is that we now have the corporations that say produce the big inputs for industrial agriculture. They now are presenting themselves as solutions to climate change. And so I think they're more willing to talk about it because then they can say, yeah, it's climate change. And they use that to, you know, justify. But then at the same time, they say, and by the way, we're selling the solution to this issue through digital agriculture or gene editing or you know, other means. And so that's really important, I would say, if you're reporting on these topics, to think about those kinds of interests of the different actors when we're talking about climate change and it's both its consequences, but also what these proposed solutions are, because it fits a neat narrative that, you know, if it's scarcity caused by climate change and oh, by the way, we're selling the solutions, come along with us, and it means more industrial agriculture. But as Finn said, agroecology, it is a viable model and its funding has been so little compared to others. But it's really interesting that since around the last 10 years, the Food and Agriculture Organization of the UN is now increasingly paying attention to agroecology. There's discussions in the Committee on World Food Security, discussions at the HLPE. It even was pushed into the Food Systems Summit narrative somewhat. And although it's off, you know, that's a whole other topic, and it's you know, proponents of agroecology say it's as much a social movement as it is a set of agricultural practices, but those who are kind of trying to co-opt the term are only focusing on the practices and not the social movement part. Again, it's important to be aware of these kind of debates. But further, just one more thing, is that agroecology is actually a method that is climate cooling. And that often gets missed in reporting. It's sort of like, yeah, this is a sustainable thing, but we have to remember that it can actually have very different effects from the kinds that industrial agriculture has, because it can improve the situation, not just stop it from being bad. Anyway, I'll stop there. Thanks.
Thank you so much. I will move to the next question from Gabriella. This one is to Margot, I guess. Gabriella, we are really sorry to hear about your hand. We wish you get well soon. So the question is, we often see reports and data about profiteering by traders, hedge funds, and etc. But what are some good ways to effectively trace that down to the supermarket stalls? Thank you so much.
Yeah. I mean, I guess this is one of those particularly contentious points that people have been fighting it out in the economic literature for quite a long time. Back when when we were reporting about this after Russia's invasion of Ukraine, we did a kind of literature review, which I could provide for everyone afterwards. But I think what's helpful, particularly for reporters, given there's that debate going on at the kind of academic level, is to look down at like what it actually means for users of those commodity markets at the time. And I actually think that some of the strongest reporting on this at the time was about the way in, you know, the point I mentioned about, for example, margin calls. At the time of the increase in the futures price, that massively increased the costs for those users. So all of the people who use the commodity markets to insure themselves were having to pay massively more costs. If they're paying more costs, that's their cost of goods. They're going to pass that on. So that's where you see that's where you can see the direct impact rather than trying to have a debate using econometrics, which is kind of what has been going on for the last like decade and a half within this debate. But yeah, it's a great question, and something that's like the challenge of reporting in this area. Jennifer, I think you would probably provide some more helpful insight as well.
No, I think you've covered it there very well, Margot.
Yep. Thank you so much. Maybe we can go to the next question from Jack. And I know that we answered it a bit, but if you want to come back to it, because I think this is a very interesting question, actually. Do you think climate change has been weaponized to increase prices or to justify the behavior? I know Jennifer has touched upon this, but I was wondering if Thin have any other thoughts, or Jennifer, you want to expand more on that? Thank you.
I mean, this is Jack, I'm sorry, this is not going to be a very satisfactory answer for you. I think in certain cases it has been. I don't think it's one of those questions that we can say like definitive yes or no. But what it has done is it has definitely allowed companies to use that as an excuse, right? Because it is true that climate change is definitely having an impact on both the quantity and the quality of food production. In fact, I think Cornell has done a few studies over the past years that show that climate impacts has already affected, it's not just that it is happening now, it has already been affecting for, going back a few years, if not at least a couple of decades, the quantity and the quality of food. So it is true, it is happening, but I think the way I would be more comfortable saying is that, yeah, climate change is being used to inflate perhaps some of the losses, some of the costs, and companies are it's a convenient excuse for companies to profiteer.
I would just add another thing too, if I could, Raouf. Or did you want to say something?
No, yes, please. And actually, my next bet was actually how to communicate this more to the climate movement, or like how we can be speaking about, like, to expand these issues also with the climate movement. Yeah, please go ahead.
Yeah, well, I was just going to say too that like on all the things that I showed that affect food prices, all of them involve people. But sometimes climate change is presented as this thing that's just happening and we forget who's responsible for it, right? But someone is responsible for climate change. Someone's responsible for all of those factors. But climate, for some reason, there's just this tendency because there's climate denialism out there, or there's, people who feel like it's just too big a problem, we can't do anything about it. So it's often presented as a thing that's just happening. And we forget that there's human agency behind it. And agency, the bigger companies, the bigger players have more agency than others. Consumers in poor marginalized parts of the world don't have as much agency. But it's important to recognize when it is used as an excuse to know that it actually is driven by policies, it's driven by people, it's driven by corporations, just to be aware of that.
Thank you so much. I want to get back to one of the questions that Anne also has asked, and she was interested in to hear more about the impact of food waste on greenhouse gases. And yeah, I think you have typed an answer to that one, right?
That may have just because I thought it might be easier typing it, and very briefly, UN is tracking this in a more systemic manner. UNEP is the environment program is now handling the food waste index, which is from the retail to the consumer, and to the, I guess, the waste management level. And then the FAO is handling the food loss index. It used to be just a single index. Now it's become food waste and food loss. And then they're going to be producing reports regularly on this topic. So it's good to, if you want, keep track. I think the latest numbers are like, I think 19% and 13%. And and it varies very much depending on a country by basis, right? For a lot of the developing countries, a lot of it comes from the food loss at the farm gate level, and the transportation. A lot of it is the lack of infrastructure to store the food. And then in a lot of the rich countries is at the retail and consumer level, where I guess we just buy a lot of food that we don't eat, right? And it's one of the, I mean, I was at a conference a couple of weeks ago where we were talking about how do we, transform our food systems, and somebody was talking about how food waste is one of those topics where you can actually have the industry and policymakers and possibly consumers align, because they're like, it's easy, right? And it's also a loss for them, so they want to reduce it. But I just want to also just to say that, it's also something that's nice to tackle, and I wouldn't say easy, but nice, and there is a sort of like a convergence around, okay, we really need to tackle it. But the issue with the just because you compare it with the meat on the environment, that is a very, very different issue in the sense of livestock production, just in terms of land use and methane emissions, the waste management. It is a massive, massive problem. And I would say in many ways, that is a massive issue if we're comparing it to food loss and waste. And that is also, again, very much tied into policies and subsidies in a way that food loss and waste is not.
Thank you so much. I would like us to move now to a question from Akanimo Kofri, and it's from Nigeria. And the question is, what can we do to influence policy holders in places like Nigeria, where accountability by politicians is hard to come by? I think this is a very challenging question, and it's I don't know if maybe Jennifer, you have some thoughts about like.
Well, I just quickly say that these kinds of issues exist everywhere in terms of policy makers being beholden to corporate and financial actors who have a lot of power, and there's a lack of transparency in terms of those connections. So we don't always see, it's invisible, that kind of influence that commercial interests have over policymakers. So it's important to think about pushing for policies even outside of the food system that matter for the food system, like transparency rules around lobbying, around funding, political donations, that kind of thing. Even though some countries have those kind of transparency rules, the problem still exists. It might even be worse because there might be more money in those economies. So it's really important. The media plays a really important role in shining a light on these kind of political influences over policymakers, and also just sort of highlighting the kinds of policies that are necessary to address the specific, food crisis situations that appear. But I'm sure others have something to say as well, so I'll stop there.
My very quick thought, and this doesn't work always, but I do say that to a lot of other journalists, is sometimes when the scrutiny is coming from the outside, it's harder for policymakers to ignore. So let's say, like I said, I come from Burma. I've lived in, Vietnam, Thailand, and a lot of the times, also policymakers in those countries are not always accountable. But if the scrutiny is coming from an international media outlet or a regional media outlet, pointing out then they start to take notice because they don't want to lose face. So that might be one way to see if there's something happening in Nigeria that could be a regional issue, and see if there is a media outlet outside that could make a bit of a noise about it. And then maybe national politicians then might not have a choice but to listen.
Thank you. I think we have one more question from Jack, and maybe this one is for Margot and Thin, the question is, what do you see as leverage points in food systems reporting? In your experience, what has led to impact or change? Thank you.
I'll have a go. It can be difficult to tell, and story selection, investigation selection based on impact can be really difficult. But I think that the work that's been done in the States on antitrust in the food sector has been really powerful, partly because it finds a new way through the whole debate. So if you want to look at, if you're looking at Tyson, like the example of Tyson is great because there were two sets of losers on either end of that. There were consumers who were being ripped off, and there were farmers who were being ripped off, and the farmers were being ripped off and forced into environmentally damaging farming. So there's a kind of virtuous cycle if you can break through and find a kind of new coalition of impacted communities to work with. And I think that gets it past the impasse, which can be pretty hard, which I think Jack will know coming from a UK farming background, that impasse is not helpful for solutions. So yeah, I think antitrust is a great example. But I think the lesson to take from it is that new coalitions really important, and looking at different impacted communities and how they work together.
I think it's, speaking of coalition, I think it was last year when we were at the IMED conference and we were talking about food systems reporting, and somebody from the examination, Miriam, was saying, look, the industry always band together, in industry associations and groups, and they're like, if you care about our food systems, if you care about our health and the environment, journalists also need to work together and have alliances and coalitions. I think that sometimes it goes against the journalistic instinct to have the scoop, to be the first or only. And I think if we are thinking about systems change, what we need is not one big, massive investigative report. What we need is persistent, constant chipping away at it. So, constant stories, constant reporting, having coalitions, having alliances, and just keeping at it, because that's how the other side works.
Thank you so much. I saw, Jennifer, you put an answer. Do you want to expand on it? Please go ahead.
Yeah, no, I was just thinking historically, because of the work that I did with my book, I read some really interesting articles that analyzed media pieces from the 50s and 60s about DDT. And it was super interesting showing these trends where when the chemical was first put on the market, most of the stories about it were quite positive because it was assumed that it was not toxic. But gradually, it started to shift, with more and more percentage of the articles focused on some of the health and environmental impacts. And I think that was deeply important for people's awareness. It wasn't just Rachel Carson's Silent Spring. It was also media and journalists who were publishing about this a decade earlier. And that led to hearings in the 1950s that eventually led, to policy change. So that's really important. And I think right now with glyphosate, there's just been a ton of reporting on it. And I think that this is changing the discourse and our understanding. So although it's a slow process, and it may feel like, you're adding one more article to a bunch of them, it's all that local context that comes in with reporting that adds up. And I think it really does make a difference when we look, historically backwards. We say, wow, that really made a difference.
Thank you so much. I think we are almost by time, and I just want to use the last 2 minutes to thank you all for this great webinar. I think I learned a lot, and I will definitely go back to the recording and look back to all these slides. I just want to also thank all the participants and attendees who stayed with us, and for all your great questions. And I just a moment to reflect on all of what we have discussed and we have spoke about. I think one of the things that we always discuss at JCC, at the Food and Nature team, we discuss that we think all the time of that we are reporting more on the things that we want to stop or things that we feel like we need to change. And the challenging part is always like how to do more stories on the things that we want to start. or like how kind of changes that we want to make. And I think today was a very important eye-opening into like how we can develop our reporting, or like how we can look at food prices from different layers and angles, and how we can reveal these stories. So I just want to thank you so much again for this. I think this was really, really helpful. And I ask everyone to just stay in touch and to reach out to you and or to me for any follow-up questions. Thank you so much. Thank you.
Thank
And goodbye.
you.
Thanks, everyone. Bye.